Right, let's take the discussion forward. Rishi Anand, the management of the company, is now joining us. So housing finance, affordable housing is an area of high growth and still the size of the opportunity is high.
That's right.
Talk to us about how your company's business model unique than some of the peers right now.
Okay, very good afternoon first of all. Yes, affordable house. The overall housing, I would say, is an opportunity for growth today, especially post-COVID. When it comes to the segment that I cater to, which is low-income housing segment, the opportunity purely from a perspective of demand side, if you look at it, there is a data that RBI had published in 2019, which says the total unit shortfall in the country, housing unit, is 10 crores. Out of this 10 crores, 9.5 crore comes in the EWS LIG segment, which I cater to. So on the demand side, there is no question on growth. On the supply side, there is too much happening from a perspective of Government of India, various initiatives like the Pradhan Mantri Awas Yojana, subsidy scheme, etc., etc. There are multiple SOPs given on this side also. So overall, I would say yes, there is a good growth opportunity in the segment that we are dealing with.
But Mr. Anand, okay, so the opportunity size is huge, but the number of people in the entire pie is also increasing.
That's right.
Given all of that, the fact that you have had growth rate of almost 20-25% in the past, what should we expect going forward? Do you think this is a sustainable growth rate for you?
I would say the kind of market reach that we have created, we are in about 20 states and union territory today, about close to about 487, 490 branches. So we spread across the length and breadth of the country. Sustaining the kind of growth that we've done in the past should not be an issue. When you reach out to from a metro location to a tier 3, tier 4 kind of locations and going deep. So growth of 20-25%, what we've given in the past should not be an issue at all.
Okay. What about growth is of course clearly something function of the environment which you're operating in a very good one.
That's right.
How are your metrics, operating metrics looking? Your loan book size, what kind of margins are you operating in as far as last data which you have?
Okay, so let me give you some certain financial numbers. In terms of, I'll give you 9 months FY23 compared to 9 months FY22. AUM, which is now stands at about 20,000 crores, grew at about 21-22%. Disbursements in the 9 months, we've done about 5,000 crores, which was a growth of about 25%. Profits, 550 crores of profit, which was a growth of 35%. ROE 9 months FY23 stands at about 18.4%. ROA stands at 4.2%. So overall metrics are healthy. We by far are the largest in terms of all these factors when it comes to the peer group.
Okay, okay. And so this IPO which we are talking about is the offer for sale from your largest shareholder, which is practically Blackstone, right?
That's right.
98%. There is one concern of the market all the time about it, that whenever PE promoted companies are coming to the market, where is the next tranche coming? So can you tell us what is the plan or something
yes.
which you may have discussed with your
So
parent?
our largest shareholder today is Blackstone, as you rightly said. About 98.7% shareholding is by Blackstone. The current issue size is 3,000 crores, out of which primary is 1,000 crores and 2,000 crore is offer for sale by the largest shareholder, which is Blackstone. I would want to tell you here, and which is a part of the declared document, that the fund life for the investment that Blackstone has done is until 2030. So we have 6 more years to go. To top it up, Blackstone has given a 6 months incremental lock-in to the SEBI required lock-in. So it's a 6 months incremental lock-in given by Blackstone to the market and to the regulator. With the 6 years life of the fund, I don't think that they will be coming back to the market in a hurry. I would want to make a point here that the moment Blackstone equity comes down to close to 50%, we will have to go back to both the regulators, which is National Housing Bank and the RBI, and to my 37 banking borrowing relationships to take an NOC from them. So it has to be, and it is currently a very well thought through process as we move ahead.
Mr. Anand, you'll appreciate me asking this, and correct me if I'm wrong, because you've got the approval from SEBI back in May 2022 for a 7,300 crore IPO size. Why was it reduced to 4,000 crore? Because even when I'm stacking up the valuation versus the peer, it's coming in cheaper. Aadhar is valued at 2.1 time forward book versus, let's say, Aavas 2.7, Aptus 3.6. What really played out there?
So there are a couple of things that happened.
Sure.
One is in 21-22, we had an approval from SEBI. The markets didn't pan out the way we wanted it to pan out, so we waited out, and that also gives a comfort to the market that our private equity investors, which is a very strong investor, Blackstone, was not in a hurry. So we waited out, the card expired, we went back to the regulator again after a wait period, and we got an approval again. So I would say it is more to do with market dynamics on what should be the right kind of OFS. It is between the advice that was given by our 5 important bankers who are involved in the entire process, and that's how the issue size was decided.
Rishi, the determinant of growth in your type of company or the business model which you're operating in is distribution or your presence foot on ground.
That's right.
Because while you may have a lot of processes on the risk management, technology enabled AI, but the user of the service, which is this loan, is still evolving on the technology front. So you have to be on ground there. So from 20 states odd, where do you plan to go? Deeper? Or exactly what's the distribution improvement plan?
Excellent question, I must say. So what is happening is our segment, the kind of segment we deal with. Before that, if I tell you my numbers in terms of reach, we are in 20 states and union territory, close to about 500 branches, 487 to be precise. So in terms of presence across states, we are in all the possible states of the country. The segment that I deal with, it is very important for us to reach out to this customer. And you rightly touched that chord, is my customer technologically enabled? I would say partially yes. In the larger context of metros and tier 1 cities, he is a little tech savvy. But when we go deep down in locations, his technology plays a very different role. As far as technology interventions inside the company is concerned, we are highly technology enabled organization in terms of giving us efficiencies, productivity. We've tied up with TCS, which is the largest service provider globally, and they've done our tech up. When it comes to consumer, for example, we have something called a consumer app, which was launched about 2 years ago. We still are to see a big bump up on the number of users. So it will take time, and that's how we see it. It's more of an education series to the customer rather than only giving a loan.
Clearly. Yeah. What's your cost of borrowing right now, and what's the mix between various lenders?
So my cost of borrowing 9-month FY 23 was 7.9%. In terms of mix, today about 18% of my borrowing comes from NCDs. About 25-26% of my borrowing has come from the regulator under the refinance scheme from National Housing Bank, and the balance is from the public sector banks.
Okay, Mr. Anand, on that note, we let you go. All the best for the IPO as well.
Clearly
looks like it's an exciting one, and the overall investor interest is also quite high. So wishing you all the best for that.
Thank you so much.
Thank you for dropping by.
Thank you. Bye-bye.
If you like this video, then like, share and subscribe to ET Now.